Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Along with risks, crypto offers unique rewards and smart strategies that can help reduce uncertainty. Knowing when to invest, how much to risk, and which assets to choose makes all the difference. Many investors traditionally rely on stocks and bonds for their portfolios. However, adding cryptocurrencies, especially established ones like Bitcoin, can offer surprising benefits for diversification. Bitcoin, for instance, has sometimes acted as a hedge against traditional inflation, much like gold. Its price movements also don't always directly follow traditional markets. This low correlation can mean that when stocks go down, Bitcoin might not, or it might even go up. This characteristic can potentially smooth out overall portfolio returns during market downturns. Of course, responsible allocation is key. You don't need to put all your savings into crypto, but a smaller, strategic allocation could enhance your portfolio's overall resilience and potential for returns. Passive income opportunities, staking, lending, DeFi. Imagine your investments working for you, even while you sleep. The crypto world offers several ways to generate passive income. For cryptocurrencies that use a mechanism called proof of stake, you can participate in staking. This involves holding your coins in a designated wallet to support the network's operations, and in return, you earn new coins as a reward. It's like earning interest on your savings account, but with crypto. Another option is lending your assets on decentralized finance, DeFi, platforms. Here, you provide your crypto to borrowers through automated protocols and earn interest on your loaned assets. Similarly, you can provide liquidity to decentralized exchanges. By depositing equal amounts of two different cryptocurrencies into a liquidity pool, you help facilitate trading and earn a share of the trading fees. While these methods offer attractive yields, it is important to remember they also carry risks, such as smart contract vulnerabilities or impermanent loss in liquidity pools. Emerging technologies and use cases, NFTs, metaverse. The crypto space is constantly evolving, bringing new technologies and use cases to light. Non-fungible tokens, NFTs, are a prime example. These unique digital assets represent ownership of anything from digital art and music to virtual real estate. NFTs are creating entirely new markets for creators and collectors, allowing for verifiable digital ownership in a way never before possible. Then there is the concept of the metaverse, which refers to immersive virtual worlds where people can interact, work, play, and socialize. NFTs play a big role in the metaverse, allowing people to own virtual land, clothing, and other digital items. These emerging areas are still in their early stages, but they represent significant potential for new economic opportunities and novel investment avenues as these virtual economies continue to grow and develop. Strategies for mitigating crypto investment risks. Navigating the crypto market can feel like a high-stakes game. While the allure of significant returns is strong, smart investors know that protecting their capital is just as important as growing it. Mitigating risk isn't about avoiding crypto entirely. It's about making informed choices to safeguard your investments. Let's look at practical steps you can take to build a more secure crypto portfolio. Thorough due diligence and research. Before putting a single dollar into any crypto project, ask yourself, do I really understand this? Hype can be loud, but solid research provides a strong foundation for your choices. Good due diligence means digging deep into a project's core elements. Here's what to look into. The project team. Who are the people behind the project? Do they have relevant experience in technology, finance, or business? Are they publicly known or anonymous? A transparent and experienced team can build more trust. Tokenomics. How is the cryptocurrency designed and distributed? What's the total supply, and how will new coins enter circulation? Is there a clear use case for the token within the project's ecosystem? Understanding these details can tell you about a crypto's long-term value. Underlying technology. What problem does this project solve, and how does its blockchain or technology work? You don't need to be a coding expert, but understanding the basic mechanics and innovation is key. Market demand and competitors. Is there a real need for this crypto or the service it provides? Who are its competitors, and how does this project stand out? Projects with clear utility and a viable market tend to be more sustainable. Spend time reading white papers, technical documentation, and independent analyses. Don't rely on social media buzz alone. Your research is your best defense against bad investments. Diversification across different assets. Putting all your eggs in one basket is rarely a good idea, especially in a volatile market like crypto. Diversification helps spread your risk so that a downturn in one asset doesn't wipe out your whole portfolio. Think of it as building a robust financial shield. Consider these diversification strategies. Within crypto, don't just buy one type of cryptocurrency. Include a mix of established assets like Bitcoin and Ethereum, but also explore promising altcoins that solve different problems or are in various sectors. For example, some altcoins focus on decentralized finance, while others are geared towards gaming or supply chain solutions. Between crypto and traditional assets, smart investors also diversify beyond just crypto. Hold traditional assets like stocks, bonds, or real estate alongside your crypto holdings. This helps balance your overall portfolio. When crypto experiences a downturn, your traditional assets might hold steady or even increase, providing stability. The goal is to reduce your exposure to any single asset's unpredictable movements. Risk management and position sizing. One of the most important rules in investing, especially in crypto, is to only invest what you can afford to lose. This isn't just advice, it's a foundational principle of responsible investing. Crypto markets are exciting, but they can be unforgiving. Implement these risk management practices. Clear entry and exit strategies. Before you buy, know exactly why you are buying and under what conditions you would sell. Set clear price targets for taking profits and stop loss points for limiting potential losses. Sticking to these predetermined strategies helps take emotion out of your trading decisions. Dollar cost averaging, DCA. This strategy involves investing a fixed amount of money at regular intervals, regardless of the asset's price. For example, buying $100 worth of Bitcoin every month. When prices are high, your fixed amount buys fewer coins. When prices are low, it buys more. Over time, this averages out your purchase price and reduces the impact of short-term volatility. It takes the stress out of trying to time the market. Being disciplined with your investment amounts and strategies is a cornerstone of managing risk effectively. Secure storage practices. Your crypto assets are digital, making their security paramount. Unlike traditional bank accounts, there's no central authority to reverse transactions if your crypto is stolen. You are your own security guard. Follow these essential security steps. Hardware wallets for cold storage. For significant holdings, a hardware wallet, like Ledger or Trezor, is your best friend. These devices store your private keys offline, making them immune to online hacks. This is often called cold storage. Strong, unique passwords. Use complex, unique passwords for every exchange and crypto service you use. Never reuse passwords. A password manager can help you manage these securely. Two-factor authentication, 2FA. Always enable 2FA on all your crypto accounts. This adds an extra layer of security, usually requiring a code from your phone or a hardware key in addition to your password. Wary of suspicious links and messages. Phishing scams are common. Always double-check URLs, and never click on suspicious links in emails or messages. If something seems off or too good to be true, it likely is. Criminals often try to trick you into revealing your private keys or login details. Protecting your crypto with robust security measures is non-negotiable. Staying informed on regulatory developments. The crypto landscape is not only technologically dynamic but also constantly influenced by governments and financial authorities. Regulatory changes can have a major impact on the value and usability of your crypto assets. Here's how to stay informed. Monitor global news. Keep an eye on new laws, proposed regulations, or major government announcements concerning crypto in key regions like the US, EU, and Asia. What happens in one country can affect the global market. Understand local laws. Know the specific crypto regulations and tax obligations in your own country or region. Regulatory clarity can bring stability, while uncertainty or new restrictions can lead to market volatility. Follow reputable sources. Get your regulatory news from trusted financial news outlets, government publications, and reputable crypto industry analysts, not just social media rumors. Staying aware of the regulatory environment helps you anticipate potential market shifts and make more informed decisions about your holdings. Crypto investing presents a unique blend of high risk and significant reward. It offers pathways to disruption and wealth creation but also demands serious attention to security, market shifts, and potential scams. Success in this evolving market comes from a commitment to learning, careful risk management, and maintaining a long-term view. While the opportunities are exciting, a cautious and informed approach remains essential for navigating this dynamic financial frontier. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.